I do want to mention that we have Michael coming on for Trading Market Open. And welcome, Michael. He's on the webinar too. We're pretty excited to have him here. We're going to talk about what he thinks, right? So this is something that is new. It's going to be, we're trying it out. Michael suggested, hey, why don't we have a student come on and have him say what he thinks? And so yeah, we'll do that. It's an interesting morning.
Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week.
Because, we start talking about, and I don't want to talk about this on Trading Market Open because we're too busy looking at the market, but we're going to have, it's like if we were a day trader, one of the things that a day trader is going to do is they're going to look at like a whole bunch of different markets. They're going to look at they'll have a stock list of 100 stocks or 50 stocks or something that they normally monitor, or they'll be doing some sort of a search on the internet for something that's moved a lot overnight, or something that's in a certain pattern that's likely to break, and they're gonna choose an asset to trade because the asset has a high probability of making a big move, and they're going to play that asset. They do that because, in general, there's not opportunities every day. When we turn around and we look at one asset, like we're looking at basically an index. I mean, you can say we're looking at 4 assets or 3 assets because we have the NDX, the Russell, or the SPX that we could trade, or actually even the diamonds we can trade, right? So we can do the ETFs. So we're just looking at the 4 indexes, and generally they all have opportunity at the same time. Not always, but generally they all have opportunity at the same time, or they don't have opportunity at the same time. But if we're looking at a singular asset, there's only so many days that are like really good trades. And I would say like 50% of the time, there's really not a whole lot there. And there's something we can do with it, but it's not like a really good opportunity. 25% of the time is really like no opportunity. There's just nothing you can do with it. 25% of the time, there's decent opportunity, but it's not like super apparent. And then you have the 25 to, I'd say 10 to 25% of the time where there's a fantastic opportunity to make a lot of money, right? So my point being is when we're doing these trading market opens, we're looking at one asset, and you got to look at like at least half the time there's not a whole lot of opportunity in that asset, and maybe even up to like 70% of the time there's not a whole lot of opportunity there. It doesn't mean it's not tradable, but it's not like it's going to be like a super trade where you get a 7-to-1 risk reward and you're going to make a ton of money. The other 25% of the time, there is, like we've had these days here where there's fantastic opportunities, like with a breakdown in this range is fantastic. And then we get into the sideways range and it gets kind of like crappy. So, as you're looking at the Trading Market Open webinars, a lot of the time we're not going to have a whole lot. And you'll see me, I'll just take a trade just so that we have an example. And, we can still learn a lot when there's not a lot of opportunity, but we're probably not necessarily going to make a lot. So if I run down to the 2-minute charts, I mean, you can kind of see one of the things I like to do is look at SPY, because I can get the overnight and I can see what's going on in the overnight. And you can see the patterns play in the overnight. So I was asked, well, do you ever take the futures into consideration when you're trading the SPX? And the answer is yes. You do want to have an idea of what the overnight's doing. And I can do that on a futures chart too. Like I could take this chart and I could go on a, well, I mean, this is it, right? Because this is intraday, this is in the day, this is what the futures market's doing, and I can see what's happening in the futures market versus what was happening in the open market. So I can see that here too. So I could come in here and do an ES. And that's perfectly fine, right? It's going to be pretty much the same thing. Or I can just look at SPY and look at the overnight. It's going to be pretty much the same thing, which is why it really doesn't matter so much, I guess. What you look at, whether it's SPX, SPY or ES, other than I do like to, especially if I get these days that are an inside day, right? So we talk about, like, if you think about this pattern right here, one of the things, if I want to link back to an earlier discussion, if you look at this right here, what is that on a longer term time frame? Well, it's just like a bullish hammer on a longer term time frame, right? I have an open, I have a low, I closed high, right? So I would have a green section in here, and then I would have a big tail here. And that's that type of candle. So when you look at that type of candle, then generally the bottom of it's considered support. The top of it's considered the resistance point. If I break to the upside, then I have this pattern, and I can put in a price pattern target to where the price is likely to go. If I break to the downside, I have a pattern. I can put a price pattern target and where it's likely to go. Right. So understand what the candles are actually telling you on the different time frames, and think about support and resistance level patterns and how that might interplay. But right now we're just kind of like in an inside chop range, given what's going on in here, and it looks like we're probably going to open probably not too far from the middle of that. Right, I can just put my projections on. Like if I project it, I can either project it here or here, but if I do the whole thing, we're pretty much we're over the 50% level. So now I look at this, now I refine myself. I say, okay, I have this in this here. I have our 50% level, and oh, look, this 50% level keys in pretty well. I have kind of like a swing low here. I have a swing low here. I have resistance here. I have a breakout here, a retest here. So this is what's going on in the background. And I might want to look at my next 50% level just to see how this is playing out and where that comes into play. And then, of course, I got the 50% of the 50%, which is where we're basically at now, right? So this is the range that we're currently playing in coming into market open. I don't know if it's going to change, but if I'm looking at my bigger range, I'm at the upper half of the bigger range. So, if I pull down into this area, for me, this is a nice control point where I could take a bullish or a bearish trade, right? But I would tend to take a bullish one because we're over the 50% level, and my longer term predominant trend is probably going to be up. So I'm like looking for a reason to go bullish, and it would be here. I also have trend line too, which is interesting. I'm just pointing stuff out as I'm working on here. This is where trend line is. But I have all this going on. I would tend to look bullish here. Then if I get a failure of trend line, then yeah, I could switch directional opinion if I want to, or I could hold. We've talked about in the past. I favor holding my initial direction because I picked my initial direction for a reason, but it doesn't mean I'm locked into that forever. One of the problems with when you get into directional trading is the tendency to swap back and forth. It's like, oh, I broke this level. That means I'm going down, and I'm going to switch my opinion. And then, oops, and then it breaks the other way, and then I'm going to switch my opinion. And then, oops, it breaks the other way. I'm going to switch my opinion. If you do that, you just mentally, it's not very friendly to you, I guess I would say. It's like, oh, back and forth, back and forth. For me, I'd rather try and hold my initial opinion and say, oops, I go bullish here and I lose it. For me, I find it mentally easier to look for another reason to go bullish on it. It doesn't mean like I'm locked into that and I would never change, but it helps prevent me from getting that back and forth, because a lot of the time you'll get a 2B reversal. It's like I'll get in here and I'll go long and I'll get knocked out, and then it'll switch back and go back over it, right? And then I have a 2B reversal, so now it's likely to go up. And I want to be able to, I don't want to be in a position where I went short and I got knocked out again, And in other words, I want to be ready, mentally prepared to be able to trade that to the upside. If I'm talking about a major failure like down here, say, I don't know, we opened up down here and then we gapped down under that, I might take the short trade. But if that switches and pulls back and then recovers, then I might take the long trade. So I'm kind of saying two things at once, and I'm aware of that, and I want to point it out. But you want to make sure mentally that you're not switching opinions too quickly. I guess that's my other thing. It's like everything's a balance. It's like I don't want to hold my opinion bullish forever, regardless of what happens in the marketplace, because there are strong signals and there are opportunities for bearish entries. I just don't, right? In the same context, I don't want to be like, oh, this looks like it broke a support level, I'm going bearish. Oh, it looks like it reversed, I'm going bullish. Oh, it looks like it reversed, I'm going bearish. Oops, it looks like, right? So there's a balance there where, and your tendency for most people is to do that. That's like 9 out of 10 traders I talk to, their tendency is to go flip back and forth, back and forth, back and forth, and that's where they get beat up. So when I'm teaching you, I'm going to tend to say, try to hold your initial opinion as long as you can, so that you're mentally prepared to take advantage of whatever happens if it goes up. And I don't want to intend that to say you never switch your opinion, because that's not good either, right? So we want to stay away from the extremes and switch when we have really good reason to, and we have the time to deal with it. Looking forward to Michael and seeing him on the next webinar. Like I said, experimental, it should be fun.